Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on commodities. We're going to look at the dollar, gold, silver, compare the two to each other, look at the senior miners, junior miners, oil, natural gas. We have a big week coming up. The FOMC on Wednesday is what everybody's going to be looking towards. Just want to talk a little bit about that first, and then we'll go into the individual tickers and the technical analysis behind it. So first things first, I don't play stock companies' earnings, and I don't play inventory reports on things like oil and natural gas. And I also have stopped playing FOMC reactions. That being said, I will play right after the reaction, 5 minutes following if it's a setup that I like. But the reason I don't play those things is, number one, I'm not a fundamental analyst, and the only people who are going to have an edge on reactions to everything I just listed are going to be people that have put in dozens of hours of fundamental analysis and sector comparisons and historical references. And if you're not doing that, if you're not putting in those dozens of hours, you're kidding yourself to think you're doing anything other than gambling. And if you're doing that and you recognize that and fully accept it, and that's your decision, that's fine. But just be aware that if you are playing this FOMC, you're gambling as to what you're hoping the reaction is going to be. And it's going to be so volatile that when it happens, if you're wrong, obviously stop losses can help protect things, but it can see a significant move very, very quickly. So I want to be a trader for long term. I've been doing it for 9 years. I want to do it for another 19 years. So if I want to do this with longevity, I have to have the odds in my favor. It would be like, a poker player playing in a long-term tournament lasting multiple days. And if they're going to be risking their stack and going all in on 50-50 coin flips, they're not going to be making it long-term through that tournament. They have to be putting their money in when they're 80% chance or better. So I wait for the pattern setups that are favorable for me with low risk, high reward opportunity. That's when I put my money in the middle and I skip the 50-50 coin flips. So looking at the dollar, we had a bull break on the daily time frame, and pretty much the reaction to the FOMC is either going to, looking at it from a longer term perspective, the monthly chart, we're either going to get confirmation of a higher high and break resistance of 98.37, or we're going to head back down and look towards the monthly support of 95.84 and potentially lose the monthly uptrend. The monthly uptrend is easily intact at this point. The bulls are more comfortable than the bears are. The bulls need a total of 45 cents for continuation and 2-year highs, and the bears would need a drop of over $2. That's a very distinct difference of where we stand. So the bulls have the advantage as far as comfort in where we stand going into the FOMC. If you are bullish on gold or miners, you want to see the dollar with a weak reaction and a drop back down towards that upper $95 support. Gold on the daily time frame still slowly pulling back. No convincing higher low established yet to head back to the recent high. And 1400 is key support. So again, heading into the FOMC 3 trading days away, we're either going to lose the daily uptrend and look to the low of weekly consolidation, 1381.62 as a key support level, or if it's a bullish reaction, we're looking up into the high of 1452. With where we stand, we are currently about $34 from resistance, and we are about $37 from support. So we're pretty much in the middle of this range. One thing to note is the bull miners are more comfortable than gold and the commodity itself. Reason being, pull back before we break the weekly higher low of support is less than 3% on gold, whereas for just looking at the senior miners as an example, that pullback is over 9%. Very distinct difference. But for gold, it's still in a daily uptrend, and it's just a question of can the bulls keep that daily uptrend, or is more prolonged consolidation coming? Silver's still holding up, much better than gold in the grand scheme of things. I would still consider it with a higher low every single day for the last 10 days in a row. But on Friday, we did see a little bit of ground gained on gold compared to silver. So looking at the XAU XAG chart, which compares gold to silver, and obviously silver's been running away with it over the last couple of weeks, we now have a bounce underway, and it's a potential little bear flag. So the question is going to be, is this just a bounce to cool off RSI and see another leg down and have silver keep complete control? Or can the bulls of gold gain enough ground to have us look for enough of a bounce where the bulls could potentially change the trend in their favor? And what that would look like is a bounce perhaps up to 88, and then the bulls would have to form a higher low and higher high to change that trend. Right now, silver still definitely stronger than gold. The question is going to be, how does this bounce play out, and is it going to be a significant bounce? Right now, it's not a significant bounce, and again, the reaction to the FOMC is going to see a lot of shift with precious metals compared to the dollar, but not only that, but individual precious metals compared to each other. So looking at the senior miners, and if you are trading leveraged ETFs, NUGT is a 3 times leveraged bull, which I've been trading. Dust is the leveraged 3 times bear, and we pulled back and closed at the low the last 2 days. So daily consolidation is underway. I personally would consider 25.97 as the daily higher low that the bulls want to maintain to keep their complete control. And again, the weekly time frame, we can pull back significantly and still maintain the weekly uptrend. Gold would likely lose the weekly uptrend long before the bull miners do because of how these charts are set up and the fact that the S&P 500 has been hitting all-time highs, and that benefits the individual bull miners, and it doesn't benefit gold itself. So Dust has seen a bounce the last couple days. Dust got the bull break of the daily inside bar on Thursday. That signal was a break at 842. We ended up going up to 885 and then closing up near the high, near 895, the high of the move. And again, it's just a question of, is this bounce just giving us a daily lower high, or can the bulls create enough space to try and change this daily trend? And of course, the FOMC reaction is going to determine which of those two scenarios it's going to be. And I couldn't possibly predict with any kind of validity what's going to happen with miners. It would be a complete guess. And that's, again, something I just don't do. I don't guess as to I don't try and predict or guess what's going to happen. I generally am reacting to what's going to happen and waiting for setups. Looking at the junior miners, same thing as the senior miners, not a whole lot of difference here. The daily time frame, birds are going crazy outside, party time morning. So we've got a healthy pullback on the daily for these senior miners, and the junior miners are very similar. Perhaps a little bit less of a pullback. We still have the same amount of space for the weekly uptrend to remain intact, much more space than the precious metals themselves have, but overall GDX and GDXJ, very similar daily charts from last week. Oil on the daily time frame, still very tight, multiple sideways days in a row. And again, as I keep saying, I am only really concerned with the broader weekly pattern, or the weekly levels and the pattern, because until we break these weekly levels, we're likely going to see choppy action on the daily and shorter term time frames. We're looking for a weekly higher low to be set compared to 50.59 sometime in the next week or two. And after the weekly inside bar this previous week, it's not convincing that our weekly higher low has been established just yet. So patiently waiting on oil, and some setups into August and September are likely coming where volatility will pick up again. Natural gas dropping down to our low, 215.6 is the only support level nearby, looking like we might drop down to a lower low. Again, as I pointed out recently, what I am more interested in is once we do break that support, if we do, how much follow through do the bears get? Because a falling wedge pattern, which is a bullish reversal pattern, the most significant aspect of that pattern is the inability for bears to get follow through on breaks of support, which indicates bears getting exhausted to the downside. So 215.6 support is going to be tested. Here's a falling wedge pattern from the last 7 months that we've been trading in on the weekly time frame. And what I would love to see, best case scenario for me, break 215.6 or hold it. Either way, stay in this downtrend support line, see a bounce, set another lower high, and then get real tight for a break into August or September. The way things are setting up, it does look like that oil and natural gas are going to see their volatility pick up in late August, early September with how their weekly patterns are shaping up. And we'll see if that does end up playing out. And if that is the case, that's the time to go aggressive playing those leveraged ETFs in those names, not when we're trading sideways with a lack of clarity like oil is currently seeing on the daily time frame. So that's where we stand in the commodity space heading into the FOMC on Wednesday. We'll certainly have a lot more information and a lot more volatility after Wednesday, and we'll look for that to dictate direction into the fall once we get that fundamental event out of the way. Appreciate you watching. Hope you have a good rest of your weekend. Do good things out there, and we'll see you next time. Couple nature and animal updates, and then we'll end it with a video of a bear from just a couple days ago. This was in the morning while I was doing my stock routine and then went to get some coffee. He was passing through the yard again, so I'm going to have to worry about him potentially messing with chickens or goats or the garden, but in general, he seems like he's just using the creek as a guide, really just a trail to go about his way, so it doesn't seem very interested in the property itself. So that may be an ongoing saga. So I went back to the other place that I was living, which was called the Tiny Temple, where I had all those tomatoes and cucumbers, and I've been taking the pots of the stuff that die, like the cucumbers are all done, so I took those pots and I'm putting that soil in our raised beds and putting the cucumbers and decomposing plant material in there as well. But the tomatoes are popping off. We're getting dozens and dozens of big, beautiful tomatoes. I've been making salsa with them. But I went back, and as I was moving the cucumbers, 2 big praying mantises were jumping off of it, and they were like, their bodies were like that big. And if you remember the videos where they were tiny, tiny, certainly all grown up, and nice to see that some of them survived. So I got a video of that somewhere, but it's on a cell phone and it's bad footage, so maybe I'll dig that up when I'm contentless. Other duck stuff. Went out the other day in the evening to stretch by the pond after wrapping up a work day, and I've seen the ducks stretch before as individuals, but they all were stretching in unison with me in terms of, you know, moving their wings and stretching their legs out, and I thought that was really funny. I've never seen them do that as a group before. So, what else? Ducks. Yesterday I fed them, and Mom usually stands on the back, and the ducks run up to the bird feeder to try and get some scraps, and I throw some food down for them there, some corn and all that good stuff. And she just watches, so I have to give her separate food. So I went and gave her separate food. She was on the other side of a raised bed, and it was the funniest thing that I've seen in a long time, where she would put her head down and take a bite of food, and then every second she would pop up and look, and her head was just, she would disappear, and then her little head would come over the raised bed. I'll have to try and film it because it's hysterical. What else we got? Bear, ducks. The hawk dove after the ducks recently. I made some food and was heading out to eat it on the porch, and I had my hands filled with plates and bowls and stuff, and the ducks were running from one pond to the other right as I walked outside, and the hawk swooped down at them. Didn't really try and make a full attempt to get one of them, but definitely an ongoing concern of Mama Duck is that hawk is around. So I ran it off, and a lot of people say, you should just let it eat the ducks and let nature be nature. Yeah, that's one way to look at it, but the way that I look at it is that hawk has not eaten a duck in many months, and it's been fine. And I've also watched it catch multiple frogs. So the hawk can stay alive and sustain itself and keep doing its frog thing. It doesn't have to eat the ducks. And my goal is to keep those ducks safe, so I'm going to keep doing it. Other than that, I'll see you all soon.